Here we have an Amazon chart. The time is 1/7/2016, 1:17 p.m. Pacific Standard Time. What we're going to be talking about are going to tell you the put side and the call side of these options. And which side should I be on? And when do I know to get out? And when do I also know how to get another entry price? So what we're going to show is Amazon.com. And we're going to show that the $33 call was $33.06 yesterday. Now, today's high was $20.50 and the low $7.86 today. Now, as a true master of buying the lower end of the delta, the beta, reduces the capital risk entry, period. The math will not lie as far as the calls were tradable when they got to 786. Here's a 3-minute chart of Amazon. So when Amazon was doing its thing, and we can go right over here at 632, but this is the longer downside reversal mathematically. And as a market maker of high frequency and bid and ask and getting the entry at a wholesale price, taking the risk out of it. $33 down here around $8, $8.50, $9. That was wholesale. And they had a $12.64 range and a high of $20.50 on the contract. Now that we have seen what a 3-minute looked like, that was going to take the movement in the option price in one directional. The greater common denominator value in that transaction, that's when you're going to learn how, well, you know what? I'm going to buy the back half of that trade because one side is inflated. People don't even know how to look at charts. And the reason why I say that is we're going to put a chart in here, and it's a 620 put on Amazon.com. And it's a 60-minute chart. 99% of the people are not used to ever seeing the data. They're not used to seeing it. What do I mean by that, Joe? You're able to see it here, but the rest of them can't. Okay? So here is the movement that we're looking at right here. The 620 put paid on a 60-minute level as Amazon was tanking intraday. And it was, because we can see here where the 60-minute bars were holding that price level. And on a short-term basis, yeah. But how do we get the entry? Well, here is the 620 put right here, right now. And the low was $3.30. And they went to $16.80. $13.50 bounce. Now, when we're buying puts, we can understand that the indexes are going to go into an opposite value. This is the most important thing, MMT, that everybody needs to know. So the 620 put on Amazon, over here is a 610 put, and that was $1.40. Here, look, 610 put. The high on the Amazon stock today, we all know that it had a breakdown at the $30 handle, so 630. Here it is. Here's Amazon, $24.79. What? Entry ranges going on, making a market. That's what we do. Super turbo option trading. That's the equity. Now, we're going to show you what a 630 put looks like as well on here. So we're going to put this 630 in here, and $7.10 per contract, and right now at 25.05, offer out. You got to know how to get out though, the bid and ask range, but that's what that put option's worth. and the broader market has been going down. So what? Here it is in our market maker platform. You can see right here that when the ratio started, let's just start this piece right there. You can see up here we have a new gentleman, and we showed him where the $half reversal value would consolidate as well, but it's going to go lower, and it did. And here on Amazon on a 3-minute, this is the MMT chart, and we know where these contracts have traded. Your problem, you've never seen a call chart or a put chart, which is being shown again over here. This is a 620 put chart. You need to know it. Back over here again, the $620 call chart was deflated. The low was 330 per contract. So if you have 10 contracts, $3,300, and when you sell them up here at $15, you made 12 grand plus the back. And this is what it's about. And people make decisions all the time. Well, man, I want to buy calls and puts, but what do they know? No, they don't know this. This over here is a $630 put that just a couple days ago was a hell of a lot cheaper than $7.10. But intraday, that put rose up to $25. What a gangbanger trade that one was, as they would say. The put side of the market is definitely working. Once again, this is a put option, and it's $10 different, and it's a 620, and you can see the value of 3.3. We bought that value because it was deflated. Our risk, um, putting the trade on the common denominator risk, was highly, highly a good entry that anyone else will ever get. And getting paid on the big sell down days. You're getting paid. Yeah, calls are going to make good money too. They just didn't get it today. The markets were down, but 620, 630 put, and we're also going to go with this part of it too. What you can do is go to stockmarketfunding.com. Just remember, when I said the S&P 30%, that's a bubble, 2016 and 17 bubble, that is going to equal that at a very minimal and could actually go down significantly even lower. But the way that we see it is that markets are going to start off with fear. And how would you like to make money on fear? Well, if you don't, you're going to lose money. But, that's what happens. And this is another thing down here. We put up here market correction coming, and it is. We started it over a year ago. And here we go. How about that? 30%. Listen, that's throughout the whole calendar year, and also making clear that when I do update it, that people understand what the timeline is. And that's what's going to happen. Right here, it's the super big trade. Input on these were the S&P 500, and on 12-second, we were showing once again another call or put chart. The public never looks at them, but this is what things were doing. And you just had to know where the overall cycle of Amazon was going to go into. And basically, we're happy to say one thing, though. Um, the daily movements of volatility and pricing options is going to be quite different for people. And I am going to show people why we like to trade the weeklies and why we like to trade the monthly, and like we try to trade this one right here. And what I'm going to show you is a entry. This is a call, and we want you to know that it's a 595 call, and this is on Amazon, and it's on a 60 minute. It looks like, yep. And we can see where the ranges were, and it's a weekly contract. It's not a monthly, so you're only going to be trading in the value of where these were written mathematically. And I see a value up here of above $20, man, on this green bar. And now let's see if they have anything on the bottom. They got to have something. Well, how about that? And this is a 595 call in the money. 595 call in the money, and how to get the wholesale what? Entry. 1495, 1590. That's the call. Here's the 630 put. Here's the chart behind us. That's a 595 call. That one's going to go at a certain price level, and that one will be worth trading. So when Amazon sets up its power option trading, that's who we are. Let's take a look at the dead right here. Let's take a look at that. What is it? It's a $600 call. And it is $32 on the previous day entry. And we're looking at buying this call. We've already made a lot of money on the puts. The high of the contract was 27.45. And I'm looking to get in based on the opening movement tomorrow with Amazon. If I get a gap down, I'm going to be able to get into these. I'm looking at 620 by 675 on these. But you would have to understand the dollar point reversal range going down in value. So those would be marked up in value. And the $600 call is on wholesale. And like I said, I'm going to throw the call on this one. It's still a weekly, but check it out. You can see over here on the 60-minute chart, the high was 1870, opening bell 1870, and an intraday high at $27. Then they were over here on the 7th. The highs were $21. The high here that we had was 1860. Then we moved over here where they were making markets in these options, and that was 1330. But you know, that was the open. 1850 was a high. Here you go. How about this one? 1820 on the open, and the high of the contract had 1820. The low of the contract, 12.25. This is a 60-minute chart on a $600 call that's in the money. And this one here is a trade to get in as a market maker and exiting to the public. So that's the cool thing about these options expirations and whatnot. And once again, it's starting the calendar day out of 1/7/2016. And we're going to premiere it live in the market. There's lots of things that we said was going to happen, and you can get signed up if you'd like. You don't have to, but if you're looking like, you would like to change what you've been doing, then we can do that for you.